Good morning. What a wonderful morning for the bull, and I can tell you why. It's everything we said. Look it, we have another worldwide markup. Pre-market futures have been open 1 hour. Early in the morning, the futures had looked very bad over in Europe. The Chinese have decided to adjust their reserves, and that had put the initial positive tone, per se. Then later, the Federal Reserve had made an announcement, how nice of them, and they did, that there will be a worldwide joint central bank effort to boost liquidity. And what does that mean? We're experts in worldwide liquidity. Not only that, outside of it, this is a pre-market futures, so you can always sign up for our classes that we have for free on that. But right now, we've got MasterCard gap in 8.58 ratio, so you have the tape leveraging up just like you had the last time that we had some news. And what people are looking for is that the note holders around the world are about to go bankrupt, as they are. But the thing about it is within the banking system itself, it's at levels that could cause stampede levels hitting banks around the world, because the society, the people, the consumer, is going to want to get their value before what? Potentially there's a run on the banks and there's no liquidity at all. Well, that's the way the world is, and that's the way the world is living. So what? What do I do in pre-market, and why is it being marked up again on the NYSE? Every single stock right here has got a $1.87 higher all the way up on pre-market gap up open futures on 11/30/2011 at 6:04 a.m. And the gap open down list, forget about it. When they inject liquidity, you're not going to see nothing. Look, what an imbalance. The reason why we're doing this here, we're doing it now, we're doing it live, we're doing it for you, because it is our goal that every MMT and any innocent person watching the video can learn about the financial world that they live in. This is a trading component right now, however, and it's a pre-market gap open. We will once again repeat the same process that we did on the initial gap out of Europe and today's news, and that they're going to inject more money. And how do I remove the toxicity within the financial worldwide system? And toxicity is toxicity. And what does that mean? That means how it spreads. And it spreads because of the interbanking system. Worldwide bankers and reserve people like Ben Bernanke and other central banks around the world look at the Fed, the ECB, the central banks of Canada, England, Japan, Switzerland in a joint effort. In a joint effort. So who's going to step up to the plate? This is what we're going to see. It is the same process that we repeated in 2008 financial crisis, because that's exactly what we're doing again. And let us be clear that you understand what those procedures will be in forward-looking video conferences with SMF. We'll be talking more about what it will have to do so that forward-looking growth, but the debt is mounted so high that they can't buy their way out of it. However, you will get volatility, bull gap volatility in the NYSE, and here it is, and it's now.